to a new video, guys. Today we will go over XRP and the two possible scenarios from here. So we will look at it and check if a bottom could be in or a different scenario where a bottom is not in yet and we see another low before we bottom out. So before we start with XRP, we will have a look at the S&P 500, the dollar and BTC to put it into perspective, because the markets will generally move into the same direction, in my opinion. To me, it doesn't make too much sense that we have a corrective move lower here on stocks, a higher move on the dollar, and a lower move still on BTC, and XRP would just skyrocket. That doesn't make too much sense to me. So let's start with the S&P 500. So what we have over here is very likely a A wave. A A wave is in 5 waves. So it looks like this. 1 second. So what do we have here? Wave 1, 2, 3, 4 and 5. So you have 5 waves for an A wave, then 3 waves up for the B wave. So like this. A, B, C, and then another 5 waves down for the C wave. So let's just, so we will take this, wave 1, wave 2, ongoing wave 3, so we will just place it here for now, wave 4 and a 5. So this is how our corrective move would look like, and the target zone for, so 1 second. So we take this one here as an A wave, a B wave with an ongoing C wave. The C wave is expected to hit the 1.272 to the 1.618 fib. That is where we will most likely see a bottom. And I have some nice confluence around the 3.2k level. So we will just place it there for now. Let's make this black and like this. Okay. So this would be A, B, and 5 waves in C currently developing here. So around this level here makes a lot of sense for a bottom. Alright. So that means that we still have, from current levels, at least 8%, but more likely 11 to 12% drop to come on stocks, and that's quite significant. Usually when you see a drop like this in the stock market, you can expect a drop of 40 to 70% on crypto. Alright, so that's the look at the S&P 500. So we expect it to move lower still. Let's check the dollar. If we now look at the dollar from the 1958. Is it 1958? No, 1985. That's the right one. Sorry. So we had corrective moves all over the place, which likely was the first corrective move was an A, more a WXY, and this then can be a bigger W with a retrace up for a X wave before heading lower again. So what we can do here is take the fib from here to the low we had. And then we can see, okay, 1 second, I have to adjust this a little bit. It's not quite the top. Alright, so now we got it. Now we can head back to this. So what we can see is it very nicely respects those levels, and that we have the next big level coming up at about 119. So before that, it doesn't make too much sense to have a big rejection. And even then, I would say the dollar will keep rising to about here. So between those two, those would be the levels that we actually expect a top for this move up. So between 134 to 119. So yeah, as it makes the most sense for this X wave. Another thing we can look at is, 1 second, so this and this. So the bigger fib is exactly the one I just shown you, and the smaller one is from this retrace here. And that gave us quite a good outlook so far. As you can see, we had a rise to here, drop to here, and then respected all the fibs all along the way up to now. So we will test the 114 now. We could see a little rejection, which then could pose the S&P to rise a little bit before heading lower again. Same thing on BTC, where you could see it rise a bit more before heading lower again. And same thing over here, where we could see our top in that, what was it, 60 to 70 region before our last low. So, quite interesting times on the smaller fibs right here. But as you can see, we have a ton of confluence around here, and the biggest confluence is at 134. So I would say it is likely to head to 134 before we really see a rejection. And that could, if we look at the entire move here, it's kind of parabolic. So if it continues like this, where do we have that? 1 second, please. So the curve, take it from here. So that's okay. So if we continue, so we could see it drop a bit again to find this parabolic support before heading higher. And that again is around, so 134 could be around the time we expect the stock market and the crypto market to bottom out. So that generally makes a lot of sense, because if so, for time perspective, you can do the C wave should be around the same time as the A wave. So that would put us to January to March, April again. Same as we have predicted it to happen here on XRP, and also most likely where we will see a bottom for BTC. So all in all, it all directs to this level here. Well, this is a parabolic move. before you then have a bigger retrace. Alright, so that's it for the S&P and the DXY. Let's get to BTC. So BTC, still very likely a B with a C wave ongoing, and this over here is likely a 1, a 2, a 3, a 4 could be done, or we had slightly higher still. That's still to be seen. Could happen, of course, before we head then to the lower targets for wave 5. So what do you have over here? Could very well be A wave, an expanded B with a C still coming, or we had this right here, an A, B, and a C. So then the 4 would have finished already here, and we are already in the 5 waves down for wave 5. That is still to be seen. But all in all, it directs towards the lower levels, no matter which count we really have there. Alright, so now after we have seen that BTC is very likely to drop lower, the dollar very likely to head higher, and the S&P 500 also to head lower, we will get over to XRP. We will first have a look at the bullish count where a bottom would be in place, and that is the more unlikely one in my opinion due to the macroeconomic factors I just shown you. So a lower level still to be hit on the S&P 500. Same goes for the Dow Jones. A very similar structure on the Dow Jones. The dollar still going parabolic, and BTC finding a new low. It just doesn't make too much sense to me that XRP would be the only asset to outperform the entire market. So from that perspective, it just doesn't make too much sense to me. But we will still go over the count and check the possibility. So this is the count we are looking at. Let's add the fibs. So from here to here. Alright. So this was our wave 1, which was a diagonal. Then you started the wave 2, which can be a WXY or an ABC wave. So those are 2 possibilities for the wave 2. And what we have over here could be labeled as a W wave. Then you have the move up to about here for the X wave, before you then have 3 waves down for a Y wave. So this would be a possible count. Would be. What you then see is a wave 1, a 2, an ongoing wave 3, a wave 4, and a wave 5 still coming then. The invalidation line, I don't talk about this right now. So in my opinion, it is very unlikely, also because we have a extremely strange structure down here for a wave 1. Because if you start from here up to here, I can't find a proper labeling to have 5 waves in this. It just looks much more like an A, B, C, so a W wave, W, X, Y, so the X wave here, so W wave here, X wave here, A, B, C. So you very likely have a W, X, Y. So a 3 wave move. So it doesn't make too much sense to be a wave 1. because that's a corrective pattern. And this move from here to here could then again be a bigger W wave, with this move down here being an X wave and the move up here being a Y wave. So that's our second count actually, where this move over here is corrective. So yeah, generally this is the more unlikely option in my opinion, as the structure just doesn't look too well, and also due to the macroeconomic factors it just wouldn't make too much sense to me. But it is still a valid possibility, so we will keep it set up, keep it in mind, and just check what price action it wants to do. So we'll delete this one. Alright, so back to the weekly and to the second scenario we have. Alright, so we will hide this one for now. Okay, and this is the more likely scenario in my opinion, where you have the diagonal up for wave 1 and then a A wave here, a B wave here, with an ongoing C wave still. So you would have a wave 1 from here to here, a wave 2 to here, a wave 3 to here, and then this could very likely be a WXY, still a higher Y incoming in my opinion, for this. So this entire move would be a diagonal, because if you now take so you take it from 1 to 3 and from wave 2 to the problem is we don't know yet where our wave 4 will be, but even if we take it here, we can see 1 second, we can see that it is expanding. So it is very likely an expanding diagonal. I don't think that the top is in here, more likely around here. So you then have the 1, the 2, the 3, the 4 and the 5 coming. Doesn't have to drop that low. So let's have a look. So the first fib we can look at is this one again. So from here to here. So it would make sense to see a wave 4 to about here. And I still think that October is a likely top for this wave 4, before then heading down for wave 5, somewhere between January to early April. That would be then our bottom. The bottom doesn't have to be at this level here, it can also be here. Okay, just to be clear, that's the target zone, so about 25 to 15 cents. Alright, so that's the most likely scenario in my opinion. If we now take here the fib for the A wave, we again end up at about 22 cents, so that's kind of an important level. Another fib we can look at is this one over here, so the same one we looked at for BTC in the past few months, where BTC also went up to the 786 fib, then down to the 113 fib for wave 2, before going higher to the 1618 for wave 3. So it's still very valid, and also so we have a few zones to look at for this wave 4. So one of them would be at about here, 61 cents. The next one would be here at 66. 1 second. 66 2. Okay, so and then another one, we could look at it like this. So if this was the wave up here is slightly bigger than a Y wave usually is, but still not much of a problem. So if we take this as the first wave, second touched here, and then again, yeah, it's pretty much the same zone all over again. So let's just say, as a minimum, we would like to see about 58, and we could head up to about here, so 72. Anywhere in between this would likely be the wave 4. One rule for the wave 4 is that it needs to be bigger than the wave 2. So let's check. So from here to here, we had 36 cents increase. From here, 36. Yeah, okay. So it would make sense to tap about 65 to 67 cents. About that region would be enough for this to be a valid wave 4 diagonal before we head lower for wave 5. So let's just say we go to 67. So about here and about here. Okay. So let's delete this for the second. Okay. So if we now assume that we go to about this level here, we can see the fibs got respected quite nicely, would fit into the entire move so far, and then you can expect a wave 5 to go into this zone here, which again is exactly the same zone we have eyed for several months now. So I would say we have good chances to hit about 67 cents, then go for this level over here. So yeah, I hope you enjoyed the video. I hope it helped with the entire move, what is likely to happen here. So both scenarios are possibilities, but this one is the most likely one in my opinion. And yeah, we will see. The invalidation for the wave, for the diagonal wave 4 would be above the wave 2 high, because it's not allowed to do so. So that would be at 91.723 cents. A move beyond that would confirm that it is actually discount over here, where bottom is already in. Anything below suggests that this is the more likely one. And also the cross analysis suggests that this is much more likely than a bottom being in already. So yeah, thank you for joining, and I hope this helped you. And if there are any questions related to this, please ask in Discord, and yeah, see you in the next one.